Ladies and gentlemen, welcome to another session on leadership mentoring. Indulge me for a couple of minutes. While you're sitting down, can I ask you to raise your right hand above your head? Right hand above your head. Fingers pointing towards the sky. Look up and slowly rotate your hand in clockwise direction. Meena, you may like to join in. It's going in clockwise direction. Please check with your neighbor if your clockwise matches the neighbor's clockwise as well. Now slowly get it just above your eye level. It's still going clockwise. Just get it below your eye level. What's happening? Just observe your hand. Anything has changed? Yes, it has gone anti-clockwise. What has changed? I believe your perspective has changed. Today's session is on building some perspectives on organization resurgence. It's about understanding how organizations break the shackles of mediocrity and move towards excellence. How does one break through this trap? I believe one would need to be aware of the big picture and also be aware of the finer details. Both are important. We can perform and create a resurgent organization if we are able to toggle between these two seamlessly. Today, we have a very prominent personality with us who's been there and done that. I have the privilege of introducing you to Ms. Vinita Bali. She has done her bachelor's in economics from Lady Shri Ram College, her MBA from JBIMS and Michigan State University. She has extensive experience in leading large organizations in India and overseas. She's worked with the Coca-Cola Company, Cadbury's, and Britannia, to name a few. Post-April 2014, she's pursuing her interests in the area of corporate as well as development sectors. Ms. Bali is also among 27 global leaders appointed by the UN to help improve maternal and child health. Today, she's going to talk on her perspectives of organization resurgence and her role in leading this organization from good to great. The floor is yours, Ms. Bali.
Thank you. Thank you very much. First of all, I'm grateful that you invited me, Mr. Deostale. And what I intend to do over the next, perhaps hour and 15 minutes, I think we've got till about 1:15, 1:30, is not to deliver a lecture or sermonize, which is why I'm not standing there. I'm here. I like to walk and talk. The second thing is I'm not going to share anything out of a book because we can all go and buy the books and read the books. So when this topic was first sort of shared with me in terms of, talk about your experiences in corporate transformation, resurgence, reinventing, whatever word we want to use that works for us, I thought the best thing that I could do was to share with you my experiences and a distillation of my learnings from those experiences so that you could then make the connections for your business. You know your business better than I will ever know your business. And you're not one business, you're many businesses combined into L&T Financial Services. You've got a B2B business, a B2C business, lots of things happening in the environment, shifts and changes. And I think the question for every organization at any point in time is, how do we do better than, our next competitor? And I think in your case, the competitors also are not, very clear. When you are the Coca-Cola company, you definitely know that Pepsi is your competitor. When you're in financial services and finance and infrastructure financing and so on and so forth, there are lots of direct and indirect competitors. So what I plan to do is actually tell you a few stories. I'm not using any charts. I'm not using PowerPoint presentations. I want to just share with you, stories, which are real stories, because those are based on my experiences. And so the first thing is a short thing that, I was talking about earlier. your performance is not only a function of what you do, but also of what the market is doing and what competitors are doing. And I was fortunate enough to work with Cadbury's in South Africa. This was in 93, 94. South Africa was reinventing itself. Mr. Mandela had been released in 1990. This was the time that the country was having its peace and reconciliation dialogue. And I worked for Cadbury's at that time. And, Cadbury's said to me that we'd like you to go and work in South Africa. And my first question was, why me? I'm neither black nor white. Where do I fit? And they said, well, that's exactly why we want you to go there. And even though it hadn't been defined as a transformative change, but the context was that here was a large market that many, many countries, many companies had either not participated in because of political reasons, or had been there but hadn't really marketed their products to the largest section of consumers in that market, which was the black South African population. And they wanted someone to come and look at this market with fresh eyes. So I will tell you that story, but I want to preface it by saying 2 or 3 things. One is resurgence happens because you don't have a choice, because the market is shifting and changing around you. There's something happened in the environment, and if you don't run fast enough, somebody else is going to run faster than you, and you lose the race. So part of resurgence is propagated or propelled or catalyzed by the external environment. And here there's a lovely little anecdote from South Africa, which is sort of the story of 2 friends who are in the jungle. And suddenly one of them spots a tiger, and they both start running. And after a point in time, one friend tells the other, wait a minute, do you think we can run faster than the tiger? And, the other friend says, well, I don't need to run faster than the tiger, I just need to run faster than you. So the question is, in real life too, when you're looking at your competitors, it's not an absolute. Very often it is, relative to what is going on in the market and what is happening there. So, one story or 2 stories, I'm going to combine them, are from my time with Cadbury's. I went to Cadbury, Nigeria. I'd worked with Cadbury in the UK before that, worked in India, and I went to Nigeria in 1992. And I remember landing there in January of 1992, and the exchange rate of the naira to the dollar was 9 naira to the dollar. On the 21st of March, they devalued it to 21 naira, 23 naira to the dollar. And all hell broke loose. I mean, imagine a market where we were virtually importing everything. Everything was dollar denominated. The tins in which we sold Bonvita, the packaging material, cocoa was coming from outside the country, and so on and so forth. And, I was sent there not to transform Cadbury Nigeria. I was sent there as part of a leadership development program that Cadbury had in place, which is that we would exchange people from different countries. I would go and work as sales and marketing director in Cadbury Nigeria. The Cadbury Nigeria sales and marketing director had come here, and frankly, I wasn't expecting this. But it didn't unfold as neatly as I will describe it to you. But what we actually ended up doing at the end of that year, that Cadbury company in Nigeria was the strongest it had ever been. So what did we do? Firstly, it was a big, suddenly all hell broke loose. And I don't know if have any of you lived and worked in Nigeria? Okay. So I would say Nigeria at that time, and I think continues to be, was the best example of Keynesian economics where demand and supply intersect to determine price. So what do I mean by that? There is, usually in India, if you're working in the FMCG business and you have distributors, we define areas and territories for distributors. The prices are determined. Every pack has an MRP, and as consumers, we go and look at that. Well, nothing like that existed in Nigeria in 1992. if I was a distributor in the south and I knew the price of Bonvita was high in the north, all I had to do was get a truck, put loads of Bonvita in it, drive to the north, and sell there. So there were no territorial definitions, and obviously when more Bonvita went to the north, the prices would come down, which is why I'm saying it was the perfect definition of demand and supply intersecting to determine price. So we said, okay, there's nothing we can do to change what has happened in the external environment. We can either make excuses to Cadbury in the UK on why we can't meet our budgets, why it's going to be a tough environment, or we use this as an opportunity to really galvanize the entire organization into doing things faster, better, with greater sense of execution than ever before. So what we created was a very simple mantra, if you like. In the consumer product business, we live and die by our consumers. If you're a consumer of malted food drinks and you don't buy a Bonvita and you buy a competitive product, well, we lose that business. We're talking about products which have very high velocity of purchase and consumption. So what we did really was to say, okay, at a time like this, how do you get everybody to align in terms of unified action, and how do we actually raise the bar in terms of execution? That involved changes right through the organization. Africa is very much a trading mentality. It's not a marketing, I'm creating a sustainable business, I'm creating consumers for the long term. It's very much a trading mentality. All of Africa is. And, things are not stable and predictable in that market in normal times, and these were certainly abnormal times. So we said we need to simplify things. So whether you were a factory person, or you were in finance, or you were in purchase, or whatever, we simply said, what are going to be the guiding ideas that are going to determine who does what? So we created a whole set of these guiding ideas, which is, it all begins and ends with the consumer. Everybody sells or supports someone indirectly or directly who sells. The whole idea was that our business was not manufacturing. Our business was not procurement. Our business was not logistics. Our business was to delight the consumer better than a Nestle or anybody else could at that point in time. And our business also was to say, how do we actually cut out all the things that we are doing that are adding no value? How do we redesign the supply chain? How do we actually look at taking cost out of the system? So, do we have to import these tins and pay all the prices that we are paying? So what it did was it unleashed a whole host of activity. We used to be afraid of making pricing decisions. Well, I can tell you in that 1 year, I probably made more decisions to increase prices than I've done in the rest of my career, because things were moving and changing really, really fast. And at the end of that year, in 1992, when we actually declared our results, what had happened was our volume had gone up. So in real terms, we did better than anybody else. Our share had gone up. Of course, the Naira revenue was, unbelievable. Even in dollar terms, with that depreciation and devaluation, we actually showed a marginal increase in dollar profit. It was the best year that Cadbury Nigeria has ever had. What that year taught me, and it wasn't as neatly divulged as this. We looked at our working capital, we looked at our inventories, we looked at how we transported. We basically just went in and looked at every aspect of the business. Because you know what? The question was, how are we going to survive in this completely chaotic environment where prices and cost is going out of the roof? And rather than panic, we used to have meetings every week. It was very clear that everybody was going to support what we wanted to do in sales and marketing. I used to work for one of the best managers I've ever worked for, a Nigerian who was educated in Oxford and Cambridge, a gentleman called Dr. Christopher Kolade. And what was most important was that the exco or Dr. Kolade and his direct reports, which included me as head of sales and marketing, the CFO, the head of procurement, the head of supply chain. Basically, we all got into a room and we said, how do we get aligned and how do we actually send an aligned message right through the company? So our behavior had to be reflective of what we were saying we needed to do. So if we said consumer is critical and important, we took decisions where we said we're going to write off something if the packaging was not right. In the olden days, we would have said, okay, open the pack and let's sell it loose. So what we did was we actually used this adversity to redefine, what a good business should look like, to redefine what an effective and efficient supply chain looks like, to redefine what the supremacy of the consumer means. So we didn't say that marketing and sales people are the most important. We simply said, if the consumer is not buying our product, we cannot be successful. And it was a year where we did a lot of stuff with people because, at the end of the day, and more so in your business, because in the businesses that I come from, we have factories and trucks and so on and so forth. But in every business, unless you've got the right people in the right roles, doing the right thing and aligned, it's not as though we didn't have arguments. We said, okay, we have arguments in the room. When we walk out of that door, we are all clear about what we are going to accomplish, who's going to do what the interdependencies are, what the timelines are, and we said there are no excuses for non-performance. Because the external environment was so difficult, it actually helped us bring everybody together in a very, very, in a very constructive, in a very productive, and in a very effective fashion. So it was one of the, I believe, still in the history of Cadbury in Nigeria, one of the best years of performance, not just within the company, but also competitively. So let me now move to my second story, which is when I joined the Coca-Cola company. This was in 1994. After Nigeria, I went to South Africa for 2 years, and if we have time, I can tell you the South African story. But I joined Coke at a time when Coke was doing great. This was 1994. Roberto Gozueta was the chairman of the company, and those of you in the room who are old enough to remember, Gozueta and Jack Welch were seen to be the harbingers of, economic value added, the two chairmen who'd created most value for their shareholders, and these were legendary, legendary people. So this was Coke in 1994. Ostensibly, everything's going great. Stock price is doing well. We are on the cover of Fortune magazine. So you say, why should a company like this reinvent itself? Well, I think part of the DNA of Coke, and which is what makes it so successful over so many years, is that, the company, there have been times when Coke has had its ups and downs. And I can tell you, I joined Coke when it was right up there, and I left Coke when it was there. Because there were 2 or 3 years when, it went a little bit astray. But I want to tell you about a company that is doing well and how top management says, but is this the best that we can do? So this question was asked, and I think the insight really was that whilst the Coca-Cola company around the world had been very, very successful, and Coke outsold Pepsi by a very large margin. In fact, there were only 4 countries in the world where Pepsi had a higher share than Coke. I'm talking about beverages. And the question really was, are we really doing everything to grow as fast as we can? So the insight was, we are doing well, but we can actually do more. That was the time when Gozueta decided to go and rehire a gentleman called Sergio Zeman, who had been the chief marketing officer of the Coca-Cola company and who was responsible for the most spectacular new product failure in the history of consumer products, which was the new Coke that was launched, and it bombed. And again, kudos to the Coca-Cola company. Within 48 hours, they were back with the original formula. They named it Coke Classic in the US, and Coke continues to sell as Coke Classic. But Sergio had left the company at that time, and so in 94 or 93, the whole thing was, we can do better than we are doing. And the insight that they operated from was, it's not about how well the bottler does. It's not about how well bottlers execute in the market. It is, at the end of the day, about the consumer. How many consumers are we getting every day? And how many consumers is our competitor getting every day? And I'll share with you some of the metrics we use to track in the Coca-Cola company that will give you a sense of, how executionally driven and focused the company is. The big thing we used to say in Coke was, we sell one drink at a time. And literally, it was about, how do you go and sell one more drink to one more outlet every day? And if we could do it every day, day upon day, that would be great. So in 1993, the Coca-Cola company decided that, the bottler system was great, but if we needed to create a wider gap and a distance between ourselves and our next biggest competitor, we had to really focus on the consumer, unlike anybody had done in the past. And we had to come up with some distinctive insights on which we would build the future growth of the company. So one of the things that they decided was that we need to go and recruit consumer marketing people. And one of the things they said is, we don't want to recruit anybody who comes from the beverage industry. In fact, this was written in the job description. And I happened to be one of those 350 people that were hired into the Coca-Cola company at that time. And one of the reasons I think I got hired was I had no previous experience in beverages. But they were looking at people who had run businesses. They were looking at people who were passionate about brands. Because if you look at the business model of the Coca-Cola company, the company really focuses only on marketing. The bottler does everything else. So unlike other businesses that I had been part of, where you're doing the entire value chain, in Coke, since the focus was primarily on consumer marketing and customer marketing, I believe the Coca-Cola company does that better than anybody else. So they went and hired 300 people. And then the question was, what do we do with 300 people? You would expect that a company like Coke would have had everything pretty much lined up. Here was a brand, ever since Interbrand started tracking the value of brands around the world, Coke since 2001 has been the most valuable brand, except in 2014, where Apple overtook Coke. But for 13 years, this has been the most valuable brand. Coke has been the most valuable brand in the world. So, I got one of these calls. It was a search company at the other end. And to cut a long story short, my first job in the Coca-Cola company was the global marketing director for brand Coke. And the mandate was, we've got to double Coke sales. And I'm sitting there and saying, what can you do to the world's most valuable brand? And the answer was a lot. So just to give you some numbers, and I'm talking about volume in cases, I am not talking about dollar sales. So it has no pricing, no currency effect. If you look at Coca-Cola volumes from 1990 to 1994, in volume terms, the company globally, or brand Coke, globally was growing at about 3.5%. During the time of 1994 to 1997, the growth rate went up to 7.5%. And by the way, it didn't come because we entered Russia and China and India. It came from those markets that had the highest per capita consumption of Coke. So Mexico, for example, had a per capita consumption of 330, which means for every man, woman, and infant in Mexico, they drank one Coke a day. The growth came from markets like North America. The growth came from Latin America, which was 26% of the total business of the Coca-Cola company. And nothing was broken. But the energy that this vision unleashed in the entire company about going back and understanding the consumer better than we had understood before. So the guiding idea was that we're going to get more consumers in more places, more often, and sell them more of our products. And we did everything that the marketing books talk about and the marketing books don't talk about. So for example, data and analytics, which would be interesting for a lot of you people. Data and analytics was what drove a lot of our strategy. So we, for example, created consumer tracking systems that told us how many people were buying how much Coke. And one of the things we found out was that daily drinkers account for 70% of Coke consumption. And then it became very clear that, on a day like this, if it is raining and you can't make the product available or consumers are not there, you lose a daily drinker, well, you've lost that business forever. So we used to actually do a daily variance analysis, because if I lost business today, I couldn't possibly come to you tomorrow and say, you didn't have your Coke yesterday, please have 2 today. Once you lost a daily drinker, you lost a daily drinker. So the entire thing was built up on, we created what is our conviction in marketing. We said, again, what are the guiding ideas and principles? So here is my distillation. It wasn't as clear when we were doing it, but we actually went back. One of the other things that the Coca-Cola company taught me was you debrief success and you debrief failure. You look at variance from last year, you look at variance from budget, you look at variance from your competitor, and you understand what is causing the successes and what is causing the failures, so that you do more of what makes you successful and you deal with what is not working. So we came up with 2 or 3 big thoughts and ideas, which I actually used very much when I came back to run Britannia 9 years ago. The first one was, there's got to be some conviction, some guiding idea of the business. And it could be that we're going to serve our customers better than anybody else, that we are going to be the most innovative company, we are going to offer you solutions that nobody else can. Each business has to define what their guiding idea is. There's another thing that you need for guiding ideas. So this is not just rah-rah and big speeches. It is real hard work. So on the other hand, we said there are tools, frameworks, and theories. And these tools, frameworks, and theories, at least in our business, have really got to do with how do we look at the consumer? How well do we know the consumer? How well do we know how my brand fits into the consumer's life, not how the consumer's life fits into my brand? We changed a lot of the ways in which we used to think. We used to have a thing which said, we've got to go and segment the market. And in Coke, we came up and said, we're not going to segment the market. We're going to segment the opportunity. The moment you say that, it's a very subtle change, but it's a very big one that drives a behavior change. Segmenting the market actually means I go and I say, who are the consumers in the market? What are they buying? How do I segment the existing consumers? Segmenting the opportunity means, how do I actually convert a non-consumer into a consumer? So let me give you a very specific example of the kinds of things that we did when we moved from segmenting the market to segmenting the opportunity. So there are many, many stories, but I'll tell you one. This is in North America, and we used to have a lot of town hall meetings, we used to communicate a lot of the new thinking that was emerging, and we simplified it by creating frameworks that 211 countries around the world could actually use either to analyze opportunities or to put together their marketing plans. And we used to share a lot of successes in each of the countries. So one way of segmenting the opportunity, this is Christmas in the US, Thanksgiving in the US. People exchange a lot of gifts, etc. at that time. Long lines in the post office. So one of the salespeople from Coke North America was standing in one of these lines and wanted a drink. And the closest place where he could actually walk to a vending machine, this was in a strip mall in the US, was to get out, go to the nearest Kroger, get a Coke. And he said, as he's waiting, he said, well, how many post offices are there in the US? What if every post office could have a vending machine of Coke? That's where it started in terms of the opportunity. And then, execution mechanism in Coke is really one of the best that I have seen. We then went, Coke North America went, made a presentation to the US Postal Service, et cetera, et cetera. And again, to cut a long story short, many, many vending machines appeared in many, many post offices, not just in the US, but in several other countries around the world where you could actually put vending machines. So this opportunity, this ability to never give up, this ability to actually continually look for opportunities to get more customers, to get more consumers, and to sell more of your products to those consumers is what I really believe differentiates the Coca-Cola Company. So it's about tools and frameworks. It's about the assets and infrastructure that you have. In our case, it was about how do we use the infrastructure of the bottler? How do we use the assets that the Coca-Cola Company has? And we created a very simple framework which said, any business, and you can apply it to your business as well, the three things that really matter are you clear what your core essence or core values are? Because if values drive behavior, then it's very, very important, certainly for the senior leadership team, to be very clear, not just in terms of these are our values. I speak to a lot of companies, and every company has a value called innovation, integrity, and respect, and sustainability, and so on. These could just be words. The companies that differentiate themselves are those that take these words and say, what is the unique L&T way of delivering this value? What is the unique Cadbury way of delivering this value? What is the unique Coke way of delivering this value? If you don't do it, those values remain on a piece of paper. Nobody in the company sees it. Your peers don't, your other associates don't, your customers don't, and it simply remains there. So the first thing really is to have a very good understanding of what is your core essence or core values. The second thing is your core competency. What are you really good at? So values drive behavior, but competency is about individual competency. But more important than that, it is about organizational capability. One of the things I found, I'd worked for 18 years abroad. I came back to India, and it may happen in your company, it may not, but I often found that in India, people use the word capability, and then they say, go hire a person. Now, capability is not a person. A person has competence, but capability is more than a person. So one of the other things that I learned, and this is again a distillation of my experience, capability is starting off with having the right person in the right job. But more important than that is, do you have the right processes for that person to actually deliver what he or she has to deliver? Do you have the right structures? I don't mean structure as an organization structure. I mean structures. This meeting is a structure. And all of you have to ask yourself, after this meeting, what is the value that is being created out of meetings like this? Is the understanding between all of you improving? Are you doing things differently? Are you going back with new ideas on how to approach the work that you're doing? This is a structure. So capability is about people. It's about processes. It is about structures. Obviously, it includes the organization structure, but it also includes structures of communication. There is a formal structure and there is an informal structure. We've heard of many companies where they say, okay, this is what we say to the media, but in reality, this is the way things happen here. You've got to ask yourself, are you one of those companies where people are saying, actually things happen this way, but when we're talking to the media, we'll say something else? Or what you see, what you do, what you hear, what you don't do, there is a consistency. Integrity, to my mind, means that there is consistency between thought, action, and what you encourage and what you don't encourage. So, so the other part of capability is structures. A fourth part of capability is metrics. How are you actually measuring what you're doing? Is there clarity on what are the metrics for measurement? Because if there is no clarity on the metrics, then how do you know whether you're successful or you're not successful? And those metrics have to be not just a game of golf, which is you're playing against yourself, but metrics have to be against your competitors. Can you run faster than your friend if you're in the jungle? Or, who plays better tennis? I don't know how many of you saw the match yesterday. But I, talk about excellence personified. Talk about excellence. Companies keep talking about excellence. I mean, I love sports and I get very, very inspired by, so what we saw yesterday in the Federer-Djokovic game was excellence. They both played right till the end. And, it was nail-biting suspense for all of us, so I can quite imagine. So what makes a winner? I think we have to pause and ask that question. Proficiency, they're both, I mean, it's hard to say who's a better player. But when you're out there, it's not just proficiency, it's your ability to concentrate, to focus, the mental stamina, in addition to the physical stamina. Actually, what really amazed me was at the end of this 4.5-hour game, they were looking as fresh as they had, just woken out of, got out of sleep. So it is the physical stamina, the mental stamina, and what is true of sports is true of corporate life. Do you have the stamina to stay with your guiding idea, to stay with your conviction, to stay with the mandate that you have given yourself in terms of what you want to accomplish, and more importantly, how you want to accomplish that? And the fifth factor in capability is really environment and culture. What does the environment reward? What does the environment penalize? Are there clear messages? Because, all of you are the leaders of this company, and all of you are watched all the time by your peers, by people who work for you, by your customers. So what you say, what you don't say, what you do, what you don't do, positions yourself. So one of the other things we used to say in Coke was, position yourself or someone else will. And that again is very important. How does L&T Financial Services want to be seen in the market? Not today, 5 years from now, 10 years from now. What is the legacy you want to create for yourself? What is going to be those one or two factors that distinguish you from everybody else who's operating in that space? There is this wonderful story of, IBM, IBM of the 70s, where this is when, Watson wrote the IBM Way, and this is out of there, where one of the stories is that, when the IBM salesperson went and called on one of their big clients, the secretary went and said to her manager, sir, there are, a few salesmen and a gentleman waiting for you. And, the gentleman was the IBM salesman. Not that they were not competitive, but, in positioning terms, you have to differentiate yourself, from everybody else. Otherwise, you get lost in the sea of sameness. And I think what I would urge you to do is, for your businesses, for your products, you have to be very clear and say, am I giving something that anybody else can give? Or what is my differentiator? Oftentimes, service is a differentiator. I am your customer. Literally, I am your customer. There are people like Pai and Manoj sitting here, and, they handle my money. And the question is that what is very important here is not just, what you tell me about what is happening in the market, but on the ground, are you responsive? Do you take quick action? Are you doing the best for your client? Because in a lot of your businesses, you're dealing with very, very important assets that people have. Their money, their investment, their financing, their businesses. And the service component becomes even more critical as compared with businesses that are largely dominated by products. So if you've got a good product like a Coke or a Cadbury or a Britannia, it's fine. And if the product is delivered consistently, the element of servicing is still important, but it is not that critical, when I'm buying a 5 rupee product or a 10 rupee product versus, investing my life saving into something or, borrowing to create a business. So I think one of the things to really think about really would be, so what is your core essence? What is the core essence of L&T Financial Services? And I think it's a very important question to answer as you are growing, as there are, acquisitions and new things coming into the business. It's not a business that has been around for forever and ever. As the business itself is configuring itself and shifting and changing, it's very important for the leadership to be able to talk about core essence and core values. It is very important to say, how will we actually measure those in behavioral terms? It's very important to be clear, as distinct from core essence, what your core competency is. Because, operational excellence comes from competency. It doesn't necessarily come from values. Two people can have the same values, but one can be far more competent than the other. And the third thing is, what are the assets and infrastructure that you have in the business that you can utilize better than anybody else? So I think, to me, the Coca-Cola company and my experience in the Coca-Cola company actually embodied each of these. And when we went back and thought about what we had done, at the end of 4 years, when the trajectory for, the world's most valuable brand doubled, the question really was, what did we do? And we didn't go and make an acquisition. This was all organic growth, by the way. This was not inorganic growth or acquisition. We went back to the core essence of the brand and activated everything that we knew, from the shape of the bottle to the color red to the sponsorship of the Olympics, the cricket sponsorship, and so on. And we went and challenged everything that we were doing. So to give you an example of how we challenged everything, Coca-Cola had been a sponsor of the Olympic Games since 1928. And when you went and asked people what it meant, most consumers said, you're a big company, you're a rich company, obviously you will give money to sponsor the games. And we said, no. If sponsorship is not leading to a greater purchase intent and an actual purchase for Coke, we have failed in our responsibility. So a lot of the marketing programs that were created, whether it was the torch relay or the Coca-Cola Olympic City or whatever, the 1996 Olympics were in Atlanta, which is, the headquarters of Coke. Everything we used to measure on the basis of preference and purchase intent. Do you prefer this brand better than anybody else, and will you buy it, or do you buy it better than any other alternative? So the point I'm making is, when you look at the metrics of a business, they have to be very granular. They have to give you, all of us, as leaders of the business, the right kind of health check of the business, because if you're not tracking the right metrics, you don't know what to do more of and what to do less of. So do you have appetite for one more story? Yeah, I can stop here and take questions from you. You want me to do the work?
Yeah.
Huh?
We will do later.
You will do later? Okay, so Britannia. I came to Britannia in 2005. It was a company, a very well-respected name. Most of us grew up eating either a Britannia biscuit or a Parle biscuit. Here was a company which was 1,500 crores. Last year we closed at 7,000 crores. So which is a CAGR roughly of about 17 to 18%. The story is not about just the top line. It is about the ability to every year, year on year, if you're talking about a 17, 18% CAGR, we're really talking about 17, 18% delivered every year for the last 9 years. And again, what had helped me was my experiences in Cadbury, Nigeria, South Africa, the Coca-Cola company. And really, the mantra for certainly consumer products is that, what determines our success is not the analyst, it's not the investor, it is not, so much even the shopkeeper, it is really the consumer. I gave you the example earlier of Coke, where, if 70% of my volume is coming from daily drinkers, then I better figure out who you are if you're a daily drinker and figure out a way of marketing to you more effectively. We did pretty much the same thing in Britannia. So in my view, all transformations start with having a conviction, having an aspiration, having an ambition. And we simply said to ourselves, I had no idea what we would do or how we would do it. But, a year after I came, we were, I think, 1,800 crores. And we said at that time that we were going to be $1 billion. We, of course, didn't know that the rupee was going to devalue so much. But we said, we're going to be $1 billion. And we gave ourselves, it was the middle of the year, 3.5 years to get to $1 billion. And you know what? We got to $1 billion. We had no idea what we would do. But we were all quite charged up. We said, if we are going to activate the latent equity of a brand called Britannia. Everybody loves the brand, but all people who love the brand, are they buying the brand? So, again, in Coke we used to say, we just don't want your share of your mind and heart, we want a share of your wallet. And if we don't get a share of your wallet, then, we're not successful in business. So what did we do? I mean, was there a magic elixir? Did we go and acquire some business? Nothing. Even the Britannia business that I'm talking to you about is organic. We just made a very small acquisition, which is less than $100 million in the Middle East, but the rest of our growth was really all organic. We didn't even launch many new brands, but what we did was we took basic propositions and we marketed them completely. So I'll give you the example of one of our brands, which was a small brand at that time, which is a very big brand now, called NutriChoice. NutriChoice used to be a boring arrowroot biscuit, which we sold a lot in Calcutta and in West Bengal. And we said that there is something in this. Now, one of the things that distinguishes companies in the FMCG space is how well you can actually read the consumer. How well can you actually, and it's not just through market research. It is a question of, research, marketplace observations, what they're doing about other categories, what are the other things that they're buying, pack sizes, et cetera, et cetera. So it's a lot of science, but some of it is also your interpretation of what you are seeing, which is very much true of your business. I think for most managers, judgment must begin where data ends. So judgment is not a substitute for data, but you have to have enough data to be able to then make the intuitively right calls. So we found in this a nugget with a lot of latent equity. NutriChoice told the consumer something about it was, nutritional and so on. So the next thing that we did was we launched a high-fiber biscuit, and we called it NutriChoice Digestive. And it was all about giving greater functionality to the product. We then went on to creating NutriChoice 5-grain, which had multiple ingredients, not just wheat flour, but it also had red rice and oats and so on and so forth, and therefore complex carbs, more healthy. The next thing in the NutriChoice umbrella was something that we worked on for a long time, which is a snack for people who are diabetic or want to be careful. It is a low glycemic index product called NutriChoice Diabetic Friendly. And this was tested in the labs and so on, and it is a low glycemic index. What was that based on? That was based on an insight, which is that if you're diabetic, sugar-free is not the answer. What is the answer is that your blood sugar should not rapidly fluctuate so that you're going from hypoglycemia to hyperglycemia and so on. So what you need is a snack that actually gives you, blood sugar is released at a constant rate rather than in spurts and so on. So there is a lot of, you might think at the end of the day it's only a biscuit, but trust me, whether it is a carbonated soft drink or a biscuit, there is a lot of work that goes into it. There's a lot of science that goes into it. There's a lot of consumer insight that goes into it. So we took that and we launched this and so on and so forth. So we didn't go about saying we're going to unleash innovation. We did innovation in a manner which was prudent, in a manner which was cost-effective and efficient, and in a manner that would work for us. And that is what actually created the growth that we saw. But that wasn't it. We actually looked at the entire value chain. The bakery industry runs on wafer-thin margins, and commodity prices can really play havoc with this. So we said there are three things that have to happen. There is a cultural transformation that was needed. How do we get to be more responsive to the consumer but more competitive in the market? How do we get to be a more agile company? That was one thing. The second thing was we needed to redefine our business model, so the innovation occurred in the business model, where we had set up our factories, what we were doing in those factories. We did a lot of work in terms of taking cost out of the system. We did a lot of work in terms of finding technical solutions to reducing cost. We designed new ovens that would reduce the baking time because energy is the highest cost in the bakery industry. We started using biomass instead of buying expensive fuel, and all our new factories are green in the sense that they use biomass and so on and so forth. We went back and looked at our entire procurement strategy. We created new platforms like Ariba, et cetera, for price discovery, really to say, how do we actually take cost out of the system? And the third thing, which was a very, very important thing, which had to run parallelly with what we were doing in the business, was the people agenda and the people transformation. And that's where I would like to end. I think yours is a business that is more than other businesses, highly driven by people, by their competencies, not just their skills and knowledge, but also the attitude they bring to their work, how they actually exemplify the behaviors that are critical to activation of the core values that you have. And therefore, an investment in people is one of the first things that you have to do. Sometimes you have to do these things in parallel because there isn't enough time. But I would say, do not underestimate the investment in people and the investment in organizational capability, which is more than just let's go and hire a person. It is about people, processes, structures, metrics, environment, and culture. All of those have to work together. And last but not least, the leadership team, this team, your colleagues, who really are the drivers for everybody else in the business, have to be very focused on what matters, what is critical, what is mission critical and what is nice to do. Oftentimes, we confuse, what is nice to do with what is mission critical. So you have to be very clear about what is mission critical and what is nice to do. And what are the levers that you as a group will activate to bring about that shift that you are desirous of, to bring about that shift which moves you from being, one of the companies in the financial services business to a company that really is the epitome of excellence. So when people talk about L&T Financial Services, they talk about you like Federer and Djokovic, and not like a whole host of tennis players whose names we may not even remember. So thank you.
Thank you very much.
So happy to take any questions, on the basis of what I've said or anything else that you want to talk about.
I just have one question. When you were in Coke, could you read the trend that people would become more, aware about their health? And
Oh, yeah.
what was your take on that? Because you were promoting a drink which otherwise is not considered very healthy. And there was a clear shift where people were moving away from such drinks.
The reality is people will never move away from eating samosas and kachoris and drinking Coke. The thing is that, of course, were we aware of it? Yes, the Coca-Cola company was, which is why the company went ahead and launched water and a whole host of other things. The thing really is that, when you have a diverse product portfolio, like in the case of the Coca-Cola company or a lot of other companies, there is a consumption opportunity and a consumer for each of these brands. Now, we're not drinking 20 Cokes a day and getting obese. I think the whole attitude that we had was you've got to find that consumption moment where Coke is better than anything else. And you've got to find that consumption moment where water is better than anything else. And it's not that people will completely stop consuming Coke. We all know what is good for us. We know that exercise is good for us. We know that fruits are good for us. So let's be honest. How many of us really would rather have a samosa than, eat some fruit? A lot of us. But, we're not eating as many samosas as the fruit that we're eating. So I think it is all contextual. As companies, you have to be responsible. As marketers, you have to be aware. And, what we're really saying is the diversity of a portfolio ensures that there is a choice for everybody. There is a choice by individuals. There is a choice by time of consumption, by place of consumption. And all of those things become important when you're actually differentiating your brand.
You obviously worked in different cultural environments because you were outside the country, and then you come to a company like Britannia, which has been there for a long time and had its set way of doing things. And you obviously put a challenge to change the entire way people looked at things. From a cultural standpoint, the way culturally we look at things in India, how difficult it is to transform a whole set of people for years who had been used to working in a particular manner. And what is that mantra that really gets the people out of their skin?
I wish there was one mantra which I could give you. 2 or 3 things. One is, it's not just that we are seeped in culture. I mean, the Americans are seeped in their culture, and so are the Brits, and so are the Africans, and so are the Latin Americans. So I think people get used to a certain way of doing things. The second thing that you said is, as far as India is concerned, I think there are big differences between how we do things in India and how, at least in my experience, I've seen things done. So let me take an example. So India had the same lead time that the UK had for the Commonwealth Games and the Olympic Games. Okay, think about how well prepared we were for the Commonwealth Games and how well prepared UK was for its games. I think that says something about our culture. Now, we should not take that as an excuse. What I found, with what I was exposed to, what I learned when I moved out of India and worked elsewhere is that we don't have a respect and regard for process that a lot of other cultures have. That there is a way of doing things. You don't become a Federer just by buying the most expensive racket and the most expensive shoes. You've got to practice, you've got to be disciplined, you've got to work hard at it. Sports people do that, artists do that, but, managers really don't do that. We think we've got our CA and MBA degrees and we can, literally do whatever. So I think part of this bravado that we have has to give way to, there is a way of doing things, which is some things have to come before certain other things. Which is why our ability to live with chaos is tremendous. Our ability to live with, this chalta hai thing is tremendous. And I personally believe that that is what is pulling down the excellence quotient for India. It's not about, if nobody's seeing, let's do it this way. It is about saying, what is it that is going to drive excellence? And excellence, I think, is a quality of mind more than anything else. First of all, you've got to have that quality which says that I am not going to take shortcuts. I am going to spend the time initially to plan something well, and then I'm going to be really, really focused on execution. The other thing that I learned is execution. We don't pay so much attention to execution. We simply say that if I said this has to be done, somehow magically it will be done. There's a lot of work that has to go between your desire and the output that you expect to achieve. The third difference is that, comparatively speaking, and I'm not bashing, India or Indian managers. I'm proud to be one. Our focus is less on output and results, and it is more about, let me tell you why it couldn't happen. And the thing is that you are there to figure out all of those things. If everything was going well, we don't need senior people, qualified people, making a lot of money to do the jobs that we are doing. So I think if we paid more attention to planning, to process, to execution, and actually literally measuring whether we are doing what we're supposed to do within budget and on time, I think we could actually have a very, very different kind of delivery. There are organizations in India who do that. And I think your parent company, in terms of a lot of the infrastructural projects, I'm sure, I haven't seen it, but I'm sure has some very, very good systems for tracking execution. But we need more of that, and we need more of that in our everyday life.
Since you are our customer, and there are two people sitting over here who are serving you, you mentioned about L&T Financial Services' unique way of approaching customer or defining them. Do you find anything unique in what they do, or do you, we don't want a direct feedback on the individual, but what we want is something which we can work upon, in the sense we can identify that unique way and work towards that.
Well, I think we can have a longer conversation on that and be very specific. I don't want to put myself or the two people on the mat. But, do you do some things really well? The answer is, of course you do. Can you be better? 100% you can be better. And, from a customer perspective, what is it that customers are looking? I mean, if I was savvy about knowing where to invest my money, I wouldn't come to you. So you've got to deliver to me more than I could possibly think for myself or do for myself. You've got to do it more responsively. You've got to bring to me new ideas that, I wasn't aware of. Now, the fact that I've been with your team for many, many years is testimony to the fact that, they're doing a good job. But can they do a better job? Of course they can.
My question is on that word unique. Because there are lots of advisors in this country.
I honestly, if I were being very honest, I don't know what is unique. I think what is unique is the kind of service, the kind of responsiveness, the kind of individuals they are. They make you feel comfortable as a client.
The way in which you deal with the customer, rather than the products.
Exactly. So I think, which is one of the things that I was saying, that in your business, the service component can be a very big differentiator. And it has to be a very big differentiator. You can have great ideas and great products, but if you're not responsive to the client's need, and I think this business is about, I'm trusting you with my very hard-earned money, and there are a lot of people like me who've earned money the old-fashioned way, in the sense that we've worked hard for the money that we've earned. So it's not some thing that just fell into your lap. For that, you need to have that comfort factor, that here is someone who's responsible, who will take care of, my wealth in a manner which is, responsible, and so on and so forth. I think in this business, communication is very important. How frequently and how diligently you communicate with the customer is very important. You've got to give your customer the good news, and you've got to give your customer the bad news. You've got to actually open up avenues for the customer. Very often, customers are asked, so this is it, you make a decision. And my response is, if I was smart enough to make the decision, I wouldn't have you. So somewhere, you also have to take greater responsibility and have the guts and the conviction to take that greater responsibility for the customer. Because we are not, your business is like going to a doctor. You never know enough, and you're relying on that doctor for some very, very emotional decisions about yourself or someone who's close to you. Similarly, in this business, it is about trust. It is about credibility. It is about track record. It is about honesty. It is about, responsiveness. By responsiveness, I mean how agile are you? Suddenly something has happened in the market which presents an opportunistic factor. How quickly are you calling? Is your client calling you up and saying, have you looked at this? Or are you calling up the client to look at this? So I think there are many things that create a distinctive service. And in that distinctive service, all of these elements of, how you deal with the customer with credibility and quality assurance and trust becomes very, very important.
What you felt is introduced the nutritious biscuit. But if you see the eating habits of Indians, breakfast, lunch, dinner, you don't find a place for this. Then how you could increase the volume from 1,500 to 7,000 crore turnover?
That is exactly the answer. Because there is no set time for eating a biscuit, I can get you to eat biscuit anytime, anywhere. Literally. It's harder to get you to consume more rice or more chapati because, there is a set time. The thing with, biscuits is, again, what did we do? We said, okay, target the opportunity. So let me give you a very specific example of what we did. One of the questions we asked ourselves is, and we do a lot of consumer work, and we found that, most biscuit purchases, not just Britannia biscuit, but any biscuit purchases, are made for consumption at home. And the person, so it's really like a grocery item. I'm going into, or I call up the kirana wala, and in my list of 25 things, which includes sugar and oats and so on, I also say, ke itne packet biscuits bhej dena. One of the questions we asked is, if I'm a teenager, what would we have to do to convert biscuit from a grocery item that my mother buys to something that I buy for myself? And that one question led to an insight that created a very big and a very new business for us, which is worth hundreds of crores. And that is the insight that we took packets of 3 biscuits and priced it at 5 rupees, and we put it in jars, pretty much the way you sell confectionery. So in transit clusters, on railway stations, interstate bus terminals, when you're boarding a bus, you're not going to buy a 100-gram or a 200-gram pack of biscuits with 20 biscuits because you don't know what to do. But you will pay 5 rupees to buy 3 biscuits, either for yourself or for your kid. So this was an insight that actually came out of my experience in confectionery. 40% of confectionery is sold on impulse, which is why if you go to a supermarket or even if you go to a kirana, they're kept near the cash till in jars or in merchandisers. So the question really is that for products like, biscuits, beverages, wafers, etc., in a way, the way I think about is demand is completely elastic. It depends on your astuteness in terms of how you're going to present an opportunity. Biscuit in a lunchbox for your kid going to school is a great idea. And a lot of people were not doing that, but they're doing that now.
I just wanted to know how important it is in your kind of work, and probably, therefore translates into something that we do, in understanding the competition. And let me just give you a very short background to the question. I remember reading a long time ago that all the Ford executives used to drive to office in a Ford car. Their family car was also a Ford car, and therefore they could never quite appreciate the changes and the innovation that competition would get in and how much the consumer would appreciate a competitor's car as opposed to their own. So how much of it is about being a consumer for your competitor and therefore understanding your competition better for your own good?
I think I would put it a little bit more broadly. I think what is important is to understand the context in which people are buying your product. And that context is defined by what your competitors are doing, what substitute products are doing, and what you are doing. So, so let's take the example of, actually I was working on another presentation and I chanced upon this, but in January of 2012, 2 events happened that will help answer your question. One was that Kodak declared Chapter 11 bankruptcy. Kodak, the most iconic of not just American brands, but brands around the world, declares bankruptcy. Within a week of that, Apple became the most valued company in the world, and it overtook ExxonMobil in terms of market cap, and it became about 425 or 422 billion dollars. So if you step back and say, what is the difference between these two companies? Kodak did what you described with Ford. You know, I mean, they were so focused on what they were doing that they completely lost out on the digitization, on the fact that consumers were actually consuming their products very, very differently. You know, digital has changed a lot of things for consumers, and Kodak completely missed out on that opportunity. Then you've got Apple, which is not just studying what consumers are doing, but is applying its own inspiration and imagination to saying, I will fundamentally change the way consumers interface with technology. So they created products which were not just functionally superior, but also had very good ease of use. So the point is that you have to be, you cannot operate any business, whether you're in the education business, in the financial services business, in the airline business, or anywhere else, without looking at the context, without looking at the landscape, which includes consumers, which includes customers, which includes competitors, which looks at the regulatory environment, which looks at all the things within which you have to do business and you have to perform better than anybody else. So I think nose to the ground and looking at yourself doesn't get you anywhere.
And it is a huge competition in financial services. It's a commodity business by and large, because the same products are being offered. And you are competing with large, small, medium, all types of people.
Sure.
For example, in lending business, he is competing with HDFC Bank. Now, look at where is HDFC Bank and where are we? So, unless we know the competition very well and constantly look at the ways and means by which competition is addressing the consumer, customer, and over and above that, make something which is better than that.
Absolutely.
Constantly, you will not survive. That's very
100%.
clear.
Yeah, that's exactly what, that's exactly what I was trying to say. It doesn't matter what business you're in. You have to have a very good understanding of your competitor, because your competitor is offering that choice to the consumer. And today, consumers have a lot of choice. They don't have to do business with you.
Why do companies innovate when the existing product is going on a good direction? Is only because there's no risk, no gain?
You know, I think the word innovation is badgered and bashed and used in all kinds of ways. So, we used to have the same discussion. The NutriChoice example I gave you, is it innovation? Is it renovation? Is it, so don't get worried about what it's called. We came up with a very simple definition of innovation. And we said anything that adds new value is an innovation. It could be a new way of doing things. It could be changing the business model. It could be coming up with a new HR recruitment policy where you're spending less and getting the same results. So anything that you do which is capable of adding new value is an innovation. And in that context, we all have to innovate continually for the same reason that we were saying earlier. Products are improving, services are improving, the customer experience is improving, and with all of that shifting and changing, we've got to be, every business has to really be sharp, because innovation is also a moving target. It is always in the context of something else, or in the context of giving a feature which nobody had thought of, but which is a very, very delightful feature. So I think, use the word innovation, but I think it's one of those things where within all of you, there should be clarity on what is innovation. One of the things we used, if it works for you, is to say anything that adds new value. So HR can innovate, everybody can innovate.
Since you've been so consumer, where would you be without pull?
Without?
Pull. If you had push and pull, and there was brand and everything else brand was doing, so where would you be without pull? Second question is, if you had an entire roster of services, when you look at Coke and Cadbury, they were flagship brands. When you look at what you did with NutriChoice, you made it a pillar brand or a standout brand. I mean, there were various other brands within that stable. So what do you think of flagship brands versus pillar brands and overall brands when you're trying to build for yourself?
You know, one of the things I've learned is that we have too much jargon in management. Innovation is an example, pillar brands, this brand, you can call it Donald Duck for all I care. You know, as long as you are clear and everybody else is clear what that means. So let me answer your first question first and then I'll come to the second one. Pull. You know, no business can sustain itself without pull. There's only so much you can push. The moment there is choice, push stops working. Push only works when, when we had no car other than Fiat and Ambassador. If you wanted to buy a car, what choice did you have? You either bought a Fiat or you bought an Ambassador. And then along came Maruti and then along came everything else. Today, do you think any car manufacturer can push its car to you? They can't. They have to create pull. They have to make it worth your while. And whatever, whether it's a budget, whether it is features, whether it is safety, whatever it is. So there is no business whatsoever that I can think of, not even religion, that survives on push. Sri Ravi Shankar also markets himself and, everybody markets themselves. So there is no business that can survive on push. The other thing is pillar brand, this brand, that brand. I think what we're really talking about is that there is a portfolio and we have to be very clear what role brands play in the portfolio. In your case, there is a portfolio and you have to be very clear what role those services play in your portfolio. You can call it anything that you want to. What is most important is there clarity on what that is, what its role is, how it interacts with the consumer, how are you going to sell it, how are you going to package it, how are you going to define it. Now, whether it is, pillar brand, this brand, mother brand, house of brands, all that professors write because they need to write something to sell books. But, what we have to do is to say, okay, what works for us? And what works for us is simplify and clarify and make sure that everybody is on the same page when those words are being used. Then it doesn't matter what you call it.
If you look at the kind of company we are, we have an infra finance on the one hand, we have a mutual fund on another hand, we have two-wheeler loans on the other hand. Each one is a different target set. So if you want to make yourself known to a wider world, how do you do it? I mean, do you take a flagship brand and do you say the most consumers, who know me and who will look at me, will look at my retail side because that's the one that, most consumers look at and won't look at something that gives me a lot of value, like wealth management or maybe infra, which is a very, very big business in terms of, how much money would eventually come into the company. But how many people would get to know me? My retail side would be probably the bigger side. So do I show that face? That was the question.
Okay, so we should not confuse the business with the brand name. I think the brand in your case, as I see it, is L&T. And within that brand, you're offering a whole host of services, some which are exclusive to certain customers and others which could span across customers. So I think your challenge, I think you are starting off on a very strong brand, which is L&T, and L&T stands for a lot of things. And in this case, let's not take it literally. I mean, if L&T stands for credibility, for trust, et cetera, that's what you're building off of. And then you're offering a whole host of services under that brand called L&T. And by the way, that makes sense because if L&T is communicating credibility, trust, quality assurance, then you've got a very good starting point. Then what you've got to differentiate yourself by is, the service that you're offering. And I think the bigger thing will be, are there any synergies? So you can look at businesses vertically and you can look at businesses horizontally. And my question to all of you, which you have to answer, is that, are you doing enough of vertical and horizontal? You know, can a customer from one vertical also be a customer in another vertical? How can you add value? That could be your distinctive advantage, because you are a multi-service organization. And you know, one of the things that may distinguish you, I don't know enough about this market, is to say that we don't do just this. We can do this, this, this for you. So it is about understanding who your customer is. What are the things, what are their needs? What is it that they're looking to solve? And how many of those solutions can your products or services bring to that customer? The more important you can make yourself to the customer, such that the customer is consuming a multiplicity of your services and not one, the more enduring you become to that customer.
My question is more it's a bit related to what he earlier asked. When you're marketing your current product, and I'll take NutriChoice as an example, to India, where culturally snack means your chuda, your farsan, or as you said, samosa and so on. And then when you go on and now try and market NutriChoice, what are the insights and what are the learnings that you all have? Because in a way for us in the mutual fund industry, we are in a similar way because we are trying to sell mutual fund to a population that is looking at bank products as a saving product, which is the chuda and the samosas of the world. And we are trying to change that and say, not chuda, not Fasan, but NutriChoice. How do you do that?
You know, it is, my answer will be very general because your question is, very general. How do you do that? I think in 2 or 3 ways, and it doesn't matter what you're selling. First, you have to be very clear, who your prospective customer is. Second, you have to be very clear what are, the needs or the areas that the customer is looking for solutions in. Third, you have to be very clear why your solution is better than any other solution. Fourth, you have to be very clear what your delivery mechanism for that solution is going to be for the customer. And fifth, you have to be extremely clear what it is going to cost you to deliver that, and do you have a sustainable business model if you were to do all of that. The good news for all of us in India is, whether we are talking about a biscuit or a chuda or a car or financial services, we are talking about a market that is hugely underserved. The per capita consumption of anything in this market is nothing. We are talking about, a very large base of consumers who, with economic growth and development, will buy more of everything. Literally, whether you're selling basmati rice or you're selling a financial services product, with growth and development, the demand of everything in India is going to increase. So that is the good news. The challenge of that good news is that everybody is jumping onto that bandwagon and everybody wants to take a share of that. So then you have to be very disciplined and very strategic and say, okay, go back to what I said earlier. Where do you have the ability to participate? What is your core competency? If you don't have a core competency that is better than your competitor, don't enter the business till at least you've built that competency. If any of us were to go and start playing a match with Federer, we'd just be thrashed out of shape in about 2 minutes. So the thing is, you have to be extremely clear what market you're pursuing. Do you have the competency to pursue that market? And if you don't, then you've got to make a choice which says, is it still worth pursuing that? Or can I direct my core competency into something else? Or that market is worth pursuing, in which case you have to go and build that core competency. So think about those 3 things. It's about competency, it's about values, and it's about assets and infrastructure. And you have to have all 3 working in a cohesive manner in order to be successful. Okay, thank you very much.
Can I request Mr. Devastali to present Vinita with a memento? So there are a few products from an NGO that we support. Mr. Devstale, we'd like to hear a few words from you as well.
That was not part of the package. I asked Sunil, but he keeps innovating. Well, I think we started this series 1 year ago, Sunil, as soon as you joined, isn't it? And this is the 4th of the series. With every session, we are experiencing something new, different perspectives, and extremely enriching thoughts. Today, number of things have got registered. But I think the most powerful thing, and we are discussing, Mr. Shivaraman is presenting to everybody about the way in which we are going to behave. And he's been talking to our senior leadership team. So, my takeaway from this session is this unique L&T financial services way. We must discover that. What is that unique? And it is not about products. She made it abundantly clear because we know everybody is selling mutual funds. Everybody is giving housing loans, lots of companies. But what is that unique L&T financial services way? That is one important point. There are a couple of other things, and I suggest that Sunil, with your kind permission, post-lunch, let us have a small session on one thought which comes to my mind, and that is, we talked about values, and she also mentioned about these core values. How do we make sure that this team which is sitting over here, morning, afternoon, evening, we demonstrate those values? This is something which is extremely important. And it is important from the point of view of the external world, the customers, our own colleagues working in the company, regulators. We are a highly regulated industry, and therefore everywhere this needs to be visible, and this team has that tremendous responsibility. For example, it's all right for us to talk about excellence, but what exactly is excellence? How do we demonstrate that excellence? And particularly the leadership team, how do we demonstrate excellence? So maybe it may be useful to have a good quality debate on that. If you plan something else today, I know you because you are a good planner, isn't it? She says planning, implementation, execution, all that. So, but in spite of that, some 10-15 minutes debate may be useful. Let's spend time. Or otherwise, you plan a session. I would like to definitely know from this team, and it has got to be an interactive session, what does it mean to practice these values? How do we demonstrate these values? And this is probably that could be one of the unique ways of L&T Financial Services, that we have these 3 core values, and those values are visible in everybody's behavior and the way in which we deal with the external community. FMCG business, you can say, is a different business. One can always say sell biscuits, cold drinks are different. I don't agree with that. Every piece what she said is equally applicable to our business. Because ultimately, that business has to do with customers, and the one of the important messages from her presentation was all these case studies, they talked about customers. They did many things to make sure that their products, their delivery, their packaging is attractive to the customers. And finally, the important message was $1 billion as far as Britannia is concerned. So everything was surrounding that. I think in our business it is equally important. And when we are saying that we are competing with LICs of this world, We are competing with all the public sector banks, private sector banks, all giant mutual funds. And we keep hearing from Ashu, they are big, they are big. I think we have to be big. That we are going there somewhere, isn't it? So if that has to happen, then ultimately that customer is the mantra. And how do we make sure that every business thinks about customers, works about customers, and our services, our delivery is of that standard that the customers cannot leave us. One last point, and this is something which is very dear to me. We have been discussing about synergy. And she talked about that. Uh, it is very, very powerful brand. And we have presence in many businesses. I think every person on the field, if that person becomes an entrepreneur, and if that person thinks about L&T Financial Services, then I think we can do lots of things. So from two-wheeler to housing, from housing to two-wheeler to, and various combinations exist for tractors to housing, from housing to mutual fund to wealth management. I think all these are related things. And how do we maximize business? And those processes we need to discuss in a little more detail in the management team next management meeting next week. But if we exploit or use those synergies well, we can do substantially better and higher than what we are doing today. So I think we have talked a lot, isn't it? You only said 2 words. Thank you very much.